Yo, what's going on, everyone? Hope you're all doing really well. So we're going to get into the case study on EU, which was on the Friday just gone. Which, I want to get into this setup because it's really clean, and it's the sort of entries that we want to be looking for and taking full advantage of, because the success rate of them playing out is really really high, and even trading to the sort that the higher high, we can bank a lot of percentage just from the move here to that high. Okay, so this is what I call a clear continuation sort of demand, which has been created by, we pushed up here, put in a higher high, higher low, pulled back, and we put in a new higher high with this candle here, which then creates a new higher low and a valid order block from this down candle here. Okay, and then you can see price delivered back to that area. We came in by this wick, but as you know, the 50% mark of the order block is what I consider a mitigation. You can see price didn't come back into it, and I didn't look for entries here because, well, there's no real reason why, but I looked at it once price clearly pushed off and then come back in, and we got some entries within here. Okay, so firstly, hourly time frame, as I've said, higher high, higher low, last down close candle. We want to be looking for long entries within this zone. Okay, so if I go all the way down to a 1 minute time frame, you can see I did not take this. As I put it into Discord, I did not take this. I set an order on this one, but didn't get tagged into it by like 0. I think it was 0.1 pips, if I'm being honest. Which, a bit annoying, but it happens. And we then had an entry here, but I didn't take that one because the move was already, we already surpassed, where was it? Yeah, this high. So even this entry here was a bit aggressive because we are at that high. But there was clear momentum to get involved with the trade, so that's why I took it. Okay, but if we just take it back to around this area here, now all of this price action here is within the night, so 1 a.m. to around 7 a.m. with this push up here. Okay, so I would be looking to take sales into the area, but obviously I don't trade this during the night because I'm sleeping. Okay, but if we just go through this, what we can see is we had a push down, we broke that low with this move here, we pushed back up into that up close candle, we then range, break structure, we do come into that candle there, but we would be looking for this area up here. We then range again, initiate out, and we sort of range, break structure again, and we have a real clear sort of point here. So we break this low with that move there. Then what we can see is we have this last up close candle, and you can see price tapped into it, tapped in again, but then ultimately, we then break structure. Well, we break structure here, but then we continue down, putting in lower lows, lower highs. And we could be looking at this as a break of structure, but it hasn't really broken with any momentum. And price just continues to sort of trickle down into the higher time frame area, as you can see here. Now, a few things that I was looking at was, we put in some equal lows. It's not perfect, but we have liquidity below these lows here, and it's really a case of waiting for supply to fail and waiting for bullish structure breaks and waiting for that momentum to shift. What we can see here is we have a range, and then we can see we break structure. So this still is valid to sell, but understanding, you know, we continue to break structure and we send this momentum up. That's broken structure to the upside. So this is really the swing point, the current swing point. It's a lower low, a little range here, but ultimately the swing high is up here. And what we can see is we break structure to the upside, showing a change in, you know, shift, but we have tapped into this area here. So it's about looking to see how price reacts to this area, and you can see we do push down, and then we, you know, supply fails basically. And what we can look at as well is equal highs. Okay, so we can delete that off. We have equal highs, so people who was looking at this to get short from that supply, we see a reaction, which we always do from supply and demand levels. So we see a reaction, but then we take liquidity, and this now is like signifying, you know, a really good sort of sign. Price is going to come back down to see where this move started. So what caused the break of structure to the upside? Well, if we look, we have a range here, but ultimately we can see this large candle, which also broke above, you know, this high. So that's the area that I'll be looking at. So we either have this down candle or this candle here. Just comes to preference what one you want to use. You know, they're pretty much the same, so, you know, not really too big of a deal there. Just get that on perfect, as you can see. Okay, so this is where the move started that caused the break, and I wouldn't really be looking at this here because, as you know, I take the extreme, and as it's one single break of structure, the move started from down here. So this is where I'll be looking to set my entry, and as you can see, that's placed on. So if we bring it forward, you can see price comes in, and again, what you can see is we had a reaction from this area here. Now, why has that reacted from that area? Well, that's where people are looking to get long from. They're trying to hold this level. People who are buying, they're trying to hold that level because it is technically a pullback and a break of structure. But we know the move has really started from down here. So this is where price is going to likely need to come to mitigate this move here. And then, you know, this is when the actual move to the upside can take place because everything's sort of been mitigated. Okay. So that's what I'll be looking at. But as I say, I didn't take this trade. But you can see it played out 1.5 pip stop loss. And I'll just zoom out. We can see we now put in momentum. We break to the upside. And we have an entry here. So we push up with this move. And essentially we broke that high there. Now, I wasn't looking at this at the time. Now, I'm not going to be taking every single entry because, you know, I'm only human. I'm going to miss entries, but I would take this. But, you know, that's the reality of trading. No matter how good of a trader you are, you're going to miss entries. Okay, but you can see push up, mitigation, and continuation. And you can see we just continue. And this is the next sort of entry. Okay, so we have this last down close candle and then we push up. But looking at it now, it didn't really break structure. We can just see, you know, a bit of momentum. But I did look at this. Looking back now is probably not something, you know, I'd be looking to take again. But, you know, in the moment, you know, you take trades that you wouldn't always take, but I took it, I didn't get tagged in, and we then did see it push up and continue. Now, if we go back to the hourly, we have put in that new high. As you can see, clear momentum, and that's the power of sort of taking these continuation sort of supply and demand levels. You know, they play out a lot. Even looking here, this is a trade we took. This move up, we broke that high. We had an area on the 15 within this wick. We tap in, we mitigate, continue, break structure, and we had news that mitigated that move there. That caused the break of structure. And then since then, we've just been, you know, because price came down to mitigate these moves, price has a clear reason to keep going. You know, break structure, keep going. And this was the next sort of entry on the higher time frames. And just run it forward. Now, the way you can manage, like if you're in this trade here, the way you can manage is either take partials as price pushes off, wait for a break of structure before moving to, you know, just above break even, which is what I do. And then from there, you can just manage on breaks of structure and mitigations. Okay, so once we pull back, we broke structure and we mitigate, we push up, then you can trail at that new higher low and then continue the process all the way up until price, you know, wants to reverse, or even, you know, you can set a target at the hourly higher high and manage on 1 minute structure coming into that level. It comes down to your own preference and what you've tested, and yeah, that's basically how you do it. So if we continue, you can see clear momentum and another very clear entry. Here you can see break of structure, last down close candle, mitigation, then we break structure. But as I've said, I wouldn't be necessarily taking these sort of trades because of how far the move has already gone, and because the higher time frame area, you know, we've already met targets at that higher high, so we're anticipating a deeper pullback, and you can see that's exactly what happened. So if you go and backtest this, like when we're trading the higher time frames, after the third entry, so we get 1, 2, 3. In this example, it was the fourth entry, but after the third sort of entry, we do see a deeper pullback because price it needs to liquidate these sort of lows and sweep liquidity from, you know, unmitigated areas. And then yeah, so that's basically how the markets are moving. If you go and backtest it, you'll see it as well. Okay, so you can see we then push down. So if I go to the hourly, you can see we could have been looking for an entry within this, but I'm going to get into that on a different video. But we didn't really. Let's go to the 1 minute quickly. Yeah, we did get an entry within here. You can see a break of structure above that higher. We pushed back in, but yeah, that was 8 p.m. So that's why I didn't take that. And now you can see what we've had is just come out of this. We've pushed down, which has taken liquidity from these lows, and what has it tapped into? What we can see is tapped into, you know, this unmitigated area here, which I would be looking to get long from, and this would still be classed as a continuation trade because, as I've mentioned in the entry types in the course content, you know, we're using liquidity to our advantage and looking at, you know, this unmitigated area as a place where prices come back into where we can get long from. But obviously, as it's, you know, 8 p.m. or, you know, 7 p.m, not looking to get involved in trades at that time on a Friday. Okay, so I do believe going into next week, this will potentially continue because we have mitigated this area. This is sort of mitigated as well, and we do know this was news, this sort of move here. So will price need to come back to it? We won't know until, Monday or Tuesday, but what we may see is lower time frame breaks the structure, and we can target up here. But as I always do, I'll wait for markets to open and base my decision and react off what price is telling me. And who knows, this could open, break structure below this low, and we could look to get short from there. But we need to react and wait for market to open and then go from there, basically. So I hope that video was helpful on that EU trade from here, and let me know if you took it as well. And I hope you all have a really good weekend, and any questions, as always, hit me up in Discord. And yeah, thank you for watching.